You already know what it is. Come one, come all. It is your boy. Back at it again. With them Hollywood trades. Right now we're going to start on Euro. Euro 4 hour. As we can see, there is a bearishness, of course, in the Euro once again. Looking at that Euro macro on the daily, we can see, yeah, we did get some bullishness. We did get a bullish imbalance. We do have a bullish key level here. I should say just a power level. I would say a zone more so than a kilo, but this is a nice level here at the body levels here, and this is pretty much how you would, anyone who's new to levels, this is pretty much how you would look at it. It's always the body levels that broke, and then the highs and the lows, of course, and the body levels kind of tell you most of where the bulk of the volumes are going to be, and it's going to be here in this range right here we're dealing with. It's going to be, pretty much here. We would be looking at this as a potential, like, clear, let it wick it, right? Let it wick it, and then we can go. Usually, when we see these, this is a larger IFEG range. That's why you can get this liquidity exchange system that's happened here. We have a smaller one here that obviously did do some type of liquidity exchange. Again, right there, we did not. This was what was concerning to me. This is one of the main details on the Euro. As far as bullishness goes, of course we know we'll get here at some point, and cross this level, and then even cross some of these levels and clear this weekly inefficiency range here. But this right here is what I was mostly concerned about. As of now, we are approaching this level and then falling from it. So we know this block here is still charged. This very block right here is still charged with liquidity, because once we get up into it, we're falling back down again. Also, we have that confirmation here that there is a lot of liquidity in this area, so that's just a confirmation there. There's a lot of orders here. This is the bulk of the orders, and as you can see, that line definitely put a damper on that close that we were looking for above this candle. We were looking for a close above this candle, and a close above this candle would have allowed us to form a base. Closes will allow you to form a base in the range. So once we got a close over this, we would have been able to form a base here, but that didn't happen. So we are looking at the formation in the lower time frame fractal here in the 4 hour. We are looking at this wick being a support zone. Of course, this whole area is a support zone, right? All these, as we always say, if you're above bearish candles, those candles should act as support. So these bearish candles here are acting as support, and the lowest one in this range is here, so this will be the strongest what? Support. All right, and so we see that happening with this key level here. Obviously, boom, right? Take that and draw that across, and you will get a support level here. And as we are testing this support level, this wick is also allowing us to have some extra fortification. This is our premium range of this zone, and this is our discount range. So in this discount range of this wick, this being the middle of the discount range here, we will see a lot of buying, a lot of long liquidity just continually being placed in this range until we probably close into it or close below this, or you know, whatever it is, if it's trying to go to the bottom and absorb the liquidity out of this block, we would definitely expect a lot of bullishness if we did get bullish blocks here. Out of this dip, we would expect a lot of bullishness if we did come in here, obviously. But that's what I'm looking at now. So as far as entry exit strategy, I don't really have anything right now. I mean, if you wanted to go, you would have to pretty much go short. You would have to pretty much keep playing short here for right now, as far as I'm concerned. Let's dial in to see what the newest developments are. We do have now a bullish key level, I guess, right? I don't like the body range, but pretty much this right here would be acting as a bullish block. This candle got closed over, so as we know, if we are above a bearish candle, that candle should act as a bullish zone. So we're going to continue to monitor what happens here with this, but we also do have a slight imbalance range. So if anything, we would want to see it do what? Come above this imbalance range today. If you wanted to go long, you would want to see it come above that range right there. That's what you would be looking at. You want to see this inversed, because as we get in here, there's going to be a lot of liquidity, a lot of bearish orders here and within this block, because we are below a what? A bullish block, and that bullish block should be resistance, as they have these bulls have a chance to exit the market, right? So that's the philosophy there. Pretty simple. Same way here. These bears, if we expect it to dip, right? A lot of people use key levels and they say, oh, I'm about to buy, but it's like you expect it to dip to allow those bears at these body levels to get out of the market. Like right here is where you would expect those bears to really start getting out of the market, and you would see wicking into this body if we're bullish. I mean, there's no real bullishness on the higher time frame, so you wouldn't expect this to hold. If we were above a 4-hour block, then we could expect the wicking into that 4-hour block and all of these lower time frame blocks to be more charged. But we expect these areas of bearishness to be more charged, because what we are building bearish on the higher time frame at this very moment. And of course, these want to be cleared. These do want to be cleared up. Of course, we want to see all this cleared up for future targeting, and we want to definitely target this for a future target as well, because this was a break point. It closed below this bullish candle. It never came back. So this is a target at some point, but we gotta see what this mitigation looks like. It should be in like a dip, a wicking, and then a rally out of it. Obviously, always, right? Not always, but that's what we would want to see. A nice, easy motion for your entry. Sometimes it is sharper, like stuff like these, but you want to see it do a nice, easy roundabout, like how it went into this imbalance right here, and we were below what? Bullish candles, and it used what? Bullish candles as what? Resistance, right? So just make sure you're paying attention to being above and below certain types of candles, and for longs or short, it'll let you really see what's going on with price, if you can see it, right? Only if you can see it. And this was a bullish bullish block, right? A bearish candle that got traded above. So this candle was supposed to be support, right, when it came down, but it just wasn't meant to be. So with the advent of this candle being completely disrespected as support, Now this very candle, and the general principle is above candles, the candles below should be support. Below candles, the candles above should be resistance. Bullish and bearish candle does play a part in it, but it's more so understanding the pivot zone when you make these references to these certain areas. This was a pivotal zone right here, so this pivotal zone is now acting as resistance. And as you see, we get the wicking. It'll be strong below this wick and into this body. There'll be some support, and then if this support gets pushed through, it'll be this body here. It looks like we got some type of something here, and it's usually gonna be right. That's why they make that G Williker, right? So I've been long on EU, but this whole thing right here was concerning me. Of course, right, 1, 2, 3, right? They just keep playing it 4, 5, 6, multiple tappings, and it hasn't even gotten into the mid range yet. But we should expect it to clear all of this and at least come back to here, because this got closed under it and never took anything out of this interaction here. So we should expect it to come up, clear this gap, clear the rest of this gap, and all of that. So if it did happen, it maybe would happen from here. Us being so close to this bar, I don't know. I don't know exactly what I expect. Excuse me. What I expect right here. But let's continue on, shall we? Let's go ahead and go to, what else do we like here? We like NASDAQs in the morning as well. I don't have this chart fully marked up as of right now. However, we can see that we are bullish at the moment. Well, let's clear some of that up. As we can see, we definitely had some interaction there. Definitely had some interaction up here. Here. The mitigational block of this range is here. This is even more so of a breaker, but for purposes of just looking for a key level in this range, we're going to use this little exchange point here. So far it seems that, yeah, there is some sensitivity with the boundary of this level. 50% as well. Boom. Right, boom, playing with it right now. We are above this candle, of course. Got closed over it, went into it, and then came out of it. So now we're using mostly this candle's range, and it actually gave us a neat little imbalance here. Neat little imbalance here on NASDAQ's chart for the session, and we do expect the imbalance to be used as support as always, especially when the bodies are holding at the mid level of this, and this is now a balanced, and it was an imbalance, but it is now balanced, and after balance we expect rally. So if we can start getting we would need a higher close here, obviously, to trigger the real liquidity. It would only be triggered after we close above these candles here. So looks like we have some type of time. Maybe they might just explode up into this void here, because this needs to be cleared. This whole range is super inefficient. right? So that needs to be cleared at some point. Why not today, right? Would be awkward for us to come back down here for what? Maybe liquidity, and maybe to mitigate more of this thing here and grab some of the orders out of there. This is a flat bottom right here, as well as the POC. But I wouldn't expect it to just make a turn. If we closed below, yeah, because it's using, this is the highest bullish block in this range right here. So it's using that. Oh, gee willikers, that's crazy, right? Yeah, no. Simple stuff. So, I don't know. This whole thing is massively inefficient right here. I mean, I'm talking about massively. This is what I call a failed delivery. It should not have left that way. So it has to correct that failure. So everything is adding up to being bullish right here. Using this as support, using this previous bearish gap that got closed above with this candle. So this whole range from, I would say from this body level, look, from this body level to that wick level would be support. Right, so we'll monitor that. Let's just look at these. Gotta read your SMTs. SMT is heavily bearish though. SMT is super bearish. Well, I don't know. I mean, I don't know. We gotta clear this one kind of went into its gap a little bit already. Remember? And then we'll use, look, oh gee, by golly, key levels, huh? Key levels are crazy, right? Key levels are madly insane, aren't they? Key levels actually do matter, don't they? Getting the right ones. And so, sorry about the fan in the background as well. My sister is over and she is not feeling well. Let's look at some more SMT. Ooh, this bad boy is constantly approaching its height, and then look at its runs. This is just a crazy chart for runs. I don't really have it fully marked, but we're using the same principles, obviously. This highest bar, these bars are giving us, all right, this would be probably what I would say I would even more so say as of right now, no, yeah, because we've seen a reaction from it. So if we didn't see a reaction off of it, if we were still playing with it, I wouldn't give it a bearish markup. I would mark it up a little different, a testing. I call this a testing markup. You don't know yet, so it's just the devil at that point. But we can see the response, and now we're closing, right? Maybe closing under here. 2 hours is a long time. We could very much just come right up here in that period of time with this volume coming in. But as of right now, where have we closed? What bars have we closed under? We have closed under I don't know. This is all one system. This is all one system. We have to see what this bar gives us. Because all this is one system being supported. This is the highest reaching bar. So this bar you see. I'm going to teach y'all something. If you get the highest closing bar and that bar is not yet closed below, that bar is an inside bar. We are existing within that bar. Man. So what I'm gonna say here is testing. It's because we're currently testing that level. So we do have a little zone of support under here, but we also do have some very inefficient delivery here, which is not fully inefficient because look at what happened within this range though. Before it created this bullish candle in this range, there's a lot of wicking, right? Wicking. All of these bars are balanced all into this range here, right? Into this range high. So this is really not so much of an inefficiency as you would expect it. Probably more so an imbalance range, to be honest, than an inefficient range, because you came up, balanced it. There is some strange here. Sorry about that. Still testing, right? We can expect this just a bearish reaction, right? Something above this level doesn't want us. So I don't know, it looks like we might be coming for the imbalance of longs in here. Maybe pick up some more orders. Let's go here to yours truly. I hate this chart, man. I really do. I love it and I hate it at the same time. Like this is definitely one of my favorite charts, but man, this chart can be very strange. Metals markets can be very strange in general, because like for instance, right, this bar right here got traded, right? It got traded through. It did get revisited after it got traded through. It got traded through here. The next bar revisited its body, right? Boom. And then, right, and then came back again. So when this happens, right, this is basically saying that the market came back for these orders to exchange them. Especially algorithms that trade, they'll move all of the orders that they have in here to exit here. They'll just exit. They'll move all their orders to exit here. It's just super smart. Like if you can get it to happen in your algorithm to where it will exit after it trades through, it'll just exit somewhere here or here. Super smart programming if you do that. So that's what happens when you get these breakpoints and such sharp reactions. I say all that to say that we usually would expect a bearish response here, somewhere in this zone from here to here once we get back into it. But being a bullish asset so close to all-time high, I call this all-time high manipulation, where it'll build a crazy bullish array just to smash straight through, because it's trying to get, look at the trajectory, right? If it just keeps going somewhere, maybe over here, it'll just be way up here somewhere. If it keeps going, so that's what it's trying to do. That's what I call all-time high manipulation. Of course, we do have a bearish block that we're interacting with at the height, but this is going to become a target now. So the first time it came up, it was a bearish block. The target was here, but it had a bearish block, came down. We are still bullish. It was able to exchange a massive amount of liquidity inside of this bar, and I've talked about that. If you want to go to my YouTube, If you want to go through my Reaper video, you'll see the theory on why this bar is like this. When these Reapers do that, and they'll cause something like this. Literally, they're just known to cause stuff like this. Mysteriously, right before it cleared the whole imbalance by a sliver, and it tapped the top of this bearish array here. All right, it just tapped it into it. It obviously used this as support. Obviously, right? Super sharp support level right there on that wick and this Reaper. Anyway, all-time high manipulation is what I'm looking at here. You just want to hold into the all-time high. Unfortunately, approaching this all-time high, the base that it approached from was just too low. When you approach that all-time high, you really want a closer base. This might have functioned, but once it ran into this bearish block and absorbed those old orders, all this inefficient range became a target for mitigation. This low and this inefficient range also became a target for sellers, right? Easy target here, that's why I just fell into it. Easy target here and here for the algorithm, and mitigation here. So this is your support level, easy support level. It just broke that candle and it never came back to get these orders out. So that's where your true level of support. A lot of people would have tried to buy from here. I got a bullish order block, we got a bullish candle, let me put a pending order or target the height. No, bro. Understand where your level is at. That should be visited. This level here should be visited. So if you have a short entry here, your short entry is going to need a take profit, not this. I mean, you wouldn't think that they would be overpowered here, because this was a part of this new system. This old system still, your support comes from a lot of orders needing to get out. That's what most of your support is going to be, not people entering. Yeah, people want to enter here, but your real, I'm really showing y'all something right now. Your real support level is where people need to get out of the opposite orders. They need to get out of shorts. So if you're long, you need to identify where people are going to get out of shorts, not where people are going to come in long. Yeah, they would come in long here. That's true, right? This is a support level. However, you got two issues. You have a compiling a massive amount of shorts, apparently, because that just went up and straight back down here, right? And then it just continued to just print bearish voids and entries, and right, and then you just got a clean TP right here. You always want to think in terms of clean TP. If you were short right here, you would want a TP here and here, right? Like this right here, right? Easy, boom, you got that one at your first out the way. Then what happened when these people TP'd? People entered long right here, right? Boom. But what happens is all of this bearish. Now you got getting out. What did I say? Getting out here, getting out here. Where do people want to get out at? That's your resistance. Where do longs want to leave? Here. They want to leave here. All right. Same with this. Where do shorts want to leave to go long so the price can go long? Here. Right? And so continuing on with that, now we have shorts, right? Where do we close over? We closed over these bars, closed over these, closed over this bar, closed over this bar. Have we closed over this one yet? No, but we're working on it, right? 56 minutes on this chart. That's another weird thing because you got multiple time charts, but on this chart, it's gonna be soon close over this bar. We can expect all of these to act as sharp exit points for bears. Like if there were bears that for whatever reason got trapped here, I don't know how they would, considering all of this happened, but maybe they thought that they could re-enter here and then target again the low for whatever reason. You wouldn't expect that when you see bullish imbalances like this, right? This is a what? Balanced. Old imbalance that was balanced, right? And then, right, exactly. So, another entry point. So, entry exit strategies. I would use something up in here for entry, maybe. We would want it to clear some of this, maybe something like this. You just find those break points, right, where they would get, where bears went in here, right? They went in here, and so they'll be wanting to get out when price comes back down here, because they may not have expected it to come through like this and get disrespected. So once it comes, this is your support. Your support is where people want to get out. Now, if we do get bearish closes indicating that we're going, that people are interested short, this is your take profit. And I would have that marked, right, as potential sell side liquidity, right, for a short. That is our first primary take profit if their short starts coming, bearish closes start coming in. And we have, let's look at the rest of the metals too, because, right, this is a full market analysis right now, and just showing a little sauce. I have not looked at this chart. This chart is crazy. I didn't realize that this chart did this. Wow. Oh, easy. I'm so sorry, buddy. I didn't see this. Wow, and I wouldn't have expected this to take off from a flat bottom. I mean, flat bottom takeoffs are crazy. You just don't expect it. You almost would have had to have been bullish from these levels that we have marked. I don't even know. I guess only thing I can do right now is mark this. Let me just, it's the only thing I can mark right now. I don't know. I don't know yet. This is crazy. Of course we have a target right here that we were looking at, but that's pretty much it right now. I guess between this target and this target, like all of this was target worthy, I should say. This block got closed under and never got touched again. So this would be our ultimate target for a buy side run. It's not buy side liquidity because it's not a take profit that you would set, but I mean, I would set this as a take profit, obviously, but most of your majority is always going to target the extreme height. So your next target would be there. That's a juicy target for people who are long. That is just, it's such a beautiful target. If you can get long from in this range, that's a beautiful target. If it were to hit, that would be oh my goodness, such a beautiful trade. But this is where your resistance would come in at, and this is where I would definitely look to start taking profits and then possibly there. But this should be an easy target once we clear all of these and you start using these as support. We want to see a dip into support. You would want to, at least, but just never a guarantee. if your lower time frame does, right? If your lower time frame does build, it can build, if it doesn't build too inefficiently, right? And it keeps absorbing like that, right? And it keeps absorbing this way. Dipping into imbalances, you know, there's one here, but right, we came down, came up. Very neatly used what we closed over this block. So what we used that block, right? We closed over all of these, right? But as you notice, this candle never made it back down to here like you would expect, because we closed over this as well. So this candle closed over these as well as this. So this next candle used this as a get out point, right? Your support is going to be where people are going to get out at. These, if there were any orders in here that got disrespected by this candle, they want to get out here. Sharp liquidity points, right? Key levels matter. Key levels matter. And so again, doing the same thing, we just closed over what? These blocks here. So you would want to watch the sensitivity, maybe a tap or maybe a full, maybe it wants to, oh no, it already mitigated this, closed over it, came down, mitigated it, got those shorts got out, and then it rallied again. So that's pretty much just how it works. And so that was the full explanation of why we could continue basically into, you know, you never know when it's going to do something like this. This is just white bar, green, 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 green. And it can keep going. You see how it can keep going. That was the explanation basically of that, how it can possibly keep going. There are a lot of times when price will just keep going and you're just like, bro, how is it doing this? It can keep doing that process of breaking and dipping, breaking and then dipping, and you see why it happens like that in actual liquidity, right? The last bar that got closed over was these. These are the last bars that got closed over this one. It didn't close over this one quite yet. It's working on it right now. But this one right here was the highest one that got closed over. And where'd the body start for this? Right there. Where did it dip down to? Somewhere up in here. Right at the tops of these candles. Right. So this is pretty much how it works. And we'll go to the last but not least market. I'm supposed to be in a meeting right now. But let's just quick analysis of Bitcoin before I gotta get off. I am looking at this zone here as an ultimate support level. As we see today, it is interacting with that, and it's interacting with this. This is a consolidation zone up against the volume profile point of control. Most orders are in here, so it's going to be a heavy consolidation. We do have this body right here of the highest candle, again controlling this range with sharp liquidity. We are failing to close above this black candle here, so we can just basically bet that we can get some higher closes. We haven't gotten any higher closes yet. Like this bar should be we could pretty much say this is all support at this point. We closed over this again, so we're going to be looking at that as support, but this is not a zone where you would want to be dealing in. But if you had to take a stab at it, we do have support levels. We did close, or we may close over this gap, right? This gap, I don't have it marked out because I more so want to see what's happening with this old liquidity zone. Once we close over this, I will mark this. In my mind, there's too much of a consolidation for me to start doing markups up in this range. whenever you have a tight range like this, just use your legacy markups. You don't have to mark up all these highs and lows and this and that. Use what the general range is because it's tight. You don't need all of that technical stuff that's happening in that consolidation range. You just need to know what is controlling the range. We have a clear take profit right here in this height. If we do go long, that's where I would take profit at. And then, of course, right, we got another high right there. You could take profit. Same with Ethereum. Ethereum is always going to lag way behind Bitcoin in the development, but we have an inefficiency here you can target on here, and then definitely some high. I would say targeting the heights here. This, if Ethereum gets here, Bitcoin is going to rally. Bitcoin is going to at least push into its highs. If Ethereum comes here, Bitcoin is going to be well at all-time highs. If it's hungry, if Ethereum traders are hungry, they're going to pull the whole market up with it. So that's a full analysis right now. I have to get into a meeting. I am late. I will holler at y'all. Make sure y'all comment, like, subscribe. Let us know what y'all want to look at next. And I am out.